Welcome back to Invest Insights Pro. On any menu there's the fancy, complicated dish that flatters you for ordering it, and the honest, simple one you actually understand. In investing, the fancy dish usually hides its price. Ramesh almost ordered it. Here's how he stopped himself. Meet Ramesh. He's 40, a shopkeeper from Jaipur, and he prides himself on being sharp. So when an advisor offered a sophisticated structured product with complex payoffs, it flattered exactly that. Clever people use clever tools, he thought. On instinct, he almost signed. But he paused, and applied a test he'd learned. Could he explain it in one sentence? He couldn't, not really. Every time he tried, the advisor's explanation sprawled off into more conditions and more scenarios. That sprawl was the warning. So he compared the two honestly. The clever product carried high fees and risks he couldn't grasp. The boring low-cost index fund he could explain in 8 words: I own a slice of hundreds of companies. One had hidden cost and risk, the other had neither. He chose the index fund. Here's what InvestPro wants you to see. A year later, Ramesh understood exactly what he owned and why. Meanwhile, friends who'd bought the sophisticated product were still trying to work out what had happened to their money. For a beginner, simple and understandable had quietly beaten clever and opaque. So here are 3 guards. 1. The one-sentence test. If you can't describe it in a line, you can't judge it, so pass. 2. Complexity hides cost. Fancy payoffs often mask high fees, and simple, low-cost options usually win after costs. And 3. Avoid leverage. Futures and options can lose more than you put in, and most retail traders lose money on them. Stay out. First for you. For your long-term money, you can choose a low-cost index fund you fully understand, or a complex structured product with high fees you can't quite explain. The sounder beginner choice? The structured product, because complex means sophisticated? A split of both? Or the index fund you understand and that's low cost? It's the index fund. Complexity isn't sophistication, it's often where high fees and hidden risks live. Understandable and cheap beats opaque and expensive. One more. A confident acquaintance is making quick money trading futures and options, and urges you, a beginner, to try it with 1 lakh. The right call? Try it, because he's making money and you don't want to miss out? Try a tiny amount just to learn? Or stay away, because leverage F&O is not for a beginner? Stay away. F&O are leveraged and unforgiving. The large majority of retail traders lose money on them. Someone else's luck is not your strategy. Here's the heart of it. For a beginner, the boring choice is usually the winning one. 3 to keep. 1. Complexity often hides cost and risk. It isn't a sign of a better product. 2. If you can't explain it in one sentence, the simple, understandable option is almost always wiser. 3. Avoid leveraged products like futures and options, because most retail traders lose on them. Never let complexity flatter you into buying what you can't explain. Start free with a risk DNA assessment at app.investinsightspro.com. Your score is next.